CBN Governor Godwin Emefiele yesterday reading out some of the committee's considerations just before they made the announcement that they would stay status quo on monetary policy rates, of course cash reserve requirement, but also talked about having a flexible exchange rate policy, which has got a lot of people talking. The buzz now is around what would that exchange rate that rate policy be, and who exactly can actually access Forex from the central bank, just basically to understand what that policy really is going to be all about. I'm joined now by Olawale Olusi, who's an investment analyst with Afrinvest, to get the market's reaction, investors' reactions to this particular development. Good morning to you, Wale.
Good morning, Harry.
So the jury is out, of course. It's the morning after, and we're taking a look at all of these decisions. Talk to us. Do you think this is a positive for the markets or a negative?
Yeah, definitely it's a positive for the market. Once again, good morning, Harry. It is a positive for the market. It's been long expected. We think the market has awaited this long enough, and we are really happy that the CBN and, of course, the Monetary Policy Committee has eventually see it as necessary to address the currency market. I think it's positive for the market.
But then how quickly do you expect this to crystallize? Because yesterday the announcement was made after the markets had closed, but we still saw the equities market facing north 0.80%. We also saw bullish movement at the treasury bills and the bonds market as well. So do you think that today, now that investors have an idea of the position of the Monetary Policy Committee, that we'll continue to see this bullish rally just for today or maybe in the days ahead?
Well, I think, first of all, for the equities market, it looks like the market has already preempted this. It's been rallying for about 6 days before the MPC, just after the NMPC announced the regulation of the petrol market. So the market has long awaited this, and then looking at what CBN guided, saying that they work out the modalities and to let the market know what is going to happen. We think either way, flexibility is flexibility. We believe that whatever that modality would be, is going to be largely in line with what can work, especially with the new petrol price and the prolonged crisis in the currency market. Although correct analysis of how that will impact the market will eventually depend on the modality of the flexibility as announced by the CBN. But we think either way, moving from the current fixed exchange rate that we have to something much more flexible is going to, really impact the economy, and it will go a long way in resolving some of the crises we've had in the economy. If you break down the recent GDP number released by MPC on Friday, and you look at, some of the non-oil sectors that constitute that decline, you will notice that some of these sectors are largely depend on effect, and the inability of them to be able to operate their business the way they have been is largely, constraining their performance. So fundamentally, the equities market is expected to, see improvement in earnings for most of the listed stock. Besides, consumer spending is likely going to, improve if, some of these companies can access more liquidity is created in the FX market. They can easily import whatever it is they need. Then economic activity can move. It also sends a signal that the Monetary Policy Committee is ready to, put forward policies that will accompany or complement the budget that was recently passed. I mean, this country is, picked off the largest budget in a long time, and it's meant to stimulate the economy. Kind of monetary policy that we saw yesterday, I think it will go a long way in complementing that, to improve performance, close some of the gaps that we've seen between parallel market rates and the official market rate. And overall, I think it's going to be positive for the oil economy and the national market.
But then, Wale, we know that a flexible exchange rate system, reading from the Business Investment Dictionary now, is a system where a monetary system allows the exchange rate to be determined by supply and demand. We've constantly had a very high case of demand, which has put pressure, of course, on the central bank and, of course, the nation's external reserves, which are actually trending around $26 and $27 billion. Now, how do you think investors will continue to perceive Nigeria's economy, seeing as, in spite of the challenges that were actually listed by the CBN governor yesterday, it has gone ahead to want to introduce this flexible exchange rate? Do you think we'll see those investors who have been hogging the sidelines now coming back in? What does this also say for the other markets that have actually put us, like the MSCI Frontier Market Index? Now, of course, they also said they were looking and hoping to see how investors would continue to react to all the issues that are coming up in the economy.
Well, I mean, you forgot to mention the fact that JP Morgan actually took us out of their index.
And Barclays as well.
And Barclays as well, largely because of these effects. And their challenge is basically the fact that there is no liquidity in the Nigerian FX market, and they have issues with transparency. I think the recent move to clear off the crisis in that space, depending on the modalities that will be, provided, will go a long way in creating the, liquidity that has been much talked about. Many of the foreign investors that we mentioned that are staying on the sideline, it's not because they don't want to come in, it's because they just need to be sure the price at which Naira is trading is fair. If the liquidity that this flexible exchange regime that we're going to be engaged in going forward is brought in place, some of these foreign flows will come in to ease supply to an extent. CBN can also calm down in terms of defending the Naira at 199. So to a long extent, you should expect some of this inflow to come in, and of course it will have an overarching impact on the economy as a whole. I think it's plus either way you look at it.
But then, do you think that this will also kind of ease off on the other pressure that we're seeing across the other macroeconomic variables, inflation, employment data, and of course a GDP outcome as well?
Yeah, definitely, it's going to ease off on other macroeconomic variables. Over the past 2 to 4 months, inflation has been broadly driven by structural challenges in the market that are one way or the other related to FX. PMS prices, electricity rates, these are some of the structural issues. But if you take PMS prices, for example, some of the challenges we had around here was largely because of the challenge related to FX. So if we fix that, you will solve the supply problem. I mean, business activities can continue. Now, the truth about cost-push inflation is that because CBN has removed about 41 items, many of these guys are now going to the parallel market to buy it at about 320, 325, currently trading about 350. Now, with the kind of flexibility that CBN is talking about, you can easily resolve that spread. That spread is too much. The Naira is overvalued at 350. I think with an appropriate pricing, that gap should close. Even the parallel market may likely crash to something around 300 or less, or 290. So with that, business activities can access FS at prices that are cheaper. So you should expect the regular, popular talk on the street that there's no dollar to ease. And of course, prices will moderate. I mean, even inflation going forward, the kind of galloping inflation that we've seen so far should ease going forward if the appropriate flexibility is in place. And don't forget, the fiscal team is going to be pumping the economy seriously. I mean, we are doing about 6.1 trillion naira budget. There's a lot of spending coming into welfare and capital projects. With this, that should support GDP growth. And of course, unemployment will also improve with that. So I think, on the whole, it's a complementary policy as far as we are concerned, and we think it should have a positive effect on the overall economic variable.
Well, Wale, a lot of people on the streets, especially those who feel that this monetary pronouncement for just those, the elite, those of the people in the high class and the middle class, for those of them who are the lower rung, they feel that this doesn't really matter to them. Why should they really be non-committal or excited about the fact that the MPC decided to stay rates?
Well, the first reason, as far as we are concerned, why the guys on the streets, the common Nigerians, should feel this is good for them is because if the CBN refuses to do something drastic about the FX challenges, number one, even the common man on the street will not be able to access, will not be able to get fuel because fuel marketers find it difficult to, get exchange rate at 285 to import fuel, and that affects everybody. That's one thing that will affect everybody that we are sure of. Then the common man on the street buy everything else that they have to consume, they have to wear, and all of them. And that have an overarching impact on price level. Inflation will keep going on if exchange rate is not put in check. This economy is still import dependent. Either we look at it until our structural issues and all those are resolved. We still import a lot of what we consume. And if we leave the parallel market at the rate at which it is trending now unchecked, prices will definitely continue to gallop. But if appropriate monetary policy like what we've seen about yesterday is put in place to close that gap, yes, prices may be high, but the common man won't pay as much price as he's paying at the moment.
Okay.
He's taking this drastic step earlier.
Wale, let's leave that conversation there for today. Of course, tomorrow there'll be so much more to chew as the markets continue to digest this particular monetary pronouncement by the Central Bank's Monetary Policy Committee. But thank you so much for coming through for us.
Pleasure. All right. Good morning.
The conversation continues in just a moment. Stay with us.